Hello everybody, Boris from BK Forex. Welcome to the commodity dollar update for Aussie dollar, dollar CAD, and Kiwi dollar from March 20th through March 24th, 2017. And the COM dollars are definitely taking center stage after many weeks of just being low volatility, back of the stage, non-interesting stories. The movement in commodity currencies, in commodities themselves, the movement in commodity currencies, and the most important interesting thing from the currency perspective, the yield plays are really starting to come back. It is interesting that despite the fact that the FOMC raised rates, it was their relatively cautious tone and the fact that the market maybe have pared down the rate expectations to 3 instead of 4 for the rest of the year, that the carry trade came back with a vengeance into the Aussie and into the Kiwi. Although the more the Fed begins to hike rates, the lower that differential becomes, irrespective of the speed of the differential. Still, for now, investors seem to be willing to buy the COM dollars on a bargain hunting basis, just because the yield differential is still 50 to 75 basis points above the dollar. So when you look at the event risk this week, the biggest event risk for us is going to be the RBNZ rate statement. That is going to be very key, because although the RBNZ is expected to obviously remain pat, the critical thing here is, are they going to join the rest of the central banks in essentially communicating that the era of easy money and quantitative easing is done? In other words, that the reflation trade is back, that their next move forward, once they stop being neutral, is to actually begin to hike rates. That could be a very interesting story, because if they do indeed, in smallest possible fashion, hint that the next move is going to be to the upside rather than to the downside, certainly provides some possibility for Kiwi, which has been hugely sold off over the last couple of weeks, and is now resting at relatively long-term support levels. So that's going to be, I think, the most interesting look. After that, the monetary policy meeting minutes, to see if they just simply reaffirm the neutral to mildly hawkish bias of the RBA that's going to be coming out on Monday. And Caddy is going to have the CPI data and the core retail sales out of Canada. The story out of Canada has actually been quite good, both on the labor side and the growth side. So it'll be interesting to see, because Canada, the interesting story with Canada has been weak oil prices, the break below 50, which has certainly hurt dollar CAD tremendously, and the much less aggressive, the much more dovish tone of the BOC. That could stand in contrast to, let's say, the more hawkish tones of RBA and RBNZ. Could provide an interesting cross trade as we look into our cross ideas in the next section. But in the meantime, those are going to be the key things that everybody's going to be looking for. So Aussie, Caddy, and Kiwi all going to have data this week that could have more volatility impact on them than before. Let's take a look at the levels and just see where they are before we get to the charts. Aussie, 78 to the top side. It's a very big resist. I don't think it can clear that in any serious fashion. 76 to the support side. Caddy is this 35-33 trade, but this 35 level should be very interesting. It's really going to be very contingent on if there's a further weakness in the oil prices. And the most interesting story to me is going to be the bounce back in the Kiwi. Can the Kiwi really rebound off of any kind of hawkish commentary of RBNZ? That's going to be very much worth a look. Let's take a look at the Aussie first. And Aussie has been, had a huge big move. This is, for Aussie, this has been, like, I think, the biggest move in more than a couple of months. Generally, and this is a thing that is very important, we talk about this in my chat room all the time. This is a high volatility candle. By high volatility candle, I mean that the high and the low here is massively, like orders of magnitude larger than anything that's preceded it for not just 2 or 3 days, but 2 or 3 months. And these type of candles, this kind of a signal, is rarely wrong, meaning that this is signaling further upside action. Now, it may consolidate, it may retrace, it may do this, but if you sort of look at the analog to get an idea of what this means when you have a big volatility candle, take a look at this one to the other side. Now, it retraced quite a lot, almost to the height of this candle, so it does not. It's not at all impossible to imagine that Aussie could fall to 76, maybe even 75.50. Before it begins its ascent higher. But the fact that it's going to go higher is a very strong possibility given what price is indicating. There was a big buy up here. The market is expecting a strong move. We haven't even had much of a retrace here. So A break above the set. Let's just say sort of a break above. Well, a true break 77.50. If we take 77.50, very strong signal that we have a chance now to mount towards the 78 highs. Now those highs have been around for a long time. It's going to be, I think, difficult to overcome it. But the closer we get here, the more momentum we have, the more possibility is that it could be a real rally and may not even peter out till about the 80s. So I think it's really worth watching. To me, technically, fundamentally, just price action wise, Aussie is a very strong buy to dip category. Unless we come back all the way down to below 75.50, the probability that we go higher from here much greater than the probability that we go lower. And you just basically want to position yourself for any kind of a buy-in along this level for further upside. So I think Aussie is certainly one of the stronger candidates to the upside. Now Kiwi, on the other hand, and I'll get to the Caddy last. Kiwi, in contrast, has been much weaker. But again, we had a big volatility candle to the upside. And unless we come back, and unless the RBNZ, and this is why the RBNZ is so crucial. If RBNZ doesn't destroy this candle, what I mean is, if RBNZ doesn't say anything that takes out the lows of this candle to the downside, then again, you also have to basically be a buy to dip player here with the assumption that 71 and possibly even 72 could be in the offing. Kiwi has had a major sell-off here, while the Aussie has kind of held bid, but it's found support at this nice, strong 69 support level. And it's very likely that we could remount and move back up to 72s. Again, as long as RBNZ doesn't destroy the candle structure here, you have to be a buyer on any kind of a buy to dip story. And dollar CAD, dollar CAD is range bound contained. 35 was certainly the big resist point. This was the weakness of the oil prices. Came back down again on strong anti-dollar flows here. It doesn't have the yield component to it that the other two calm dollars do, but it still remains to be traded very much on anti-dollar flows. So I think any kind of a dollar weakening gives us a chance to move this down to 32. I do think that ultimately, though, it's probably going to peter out at a higher low here. I think in some ways, dollar CAD of all the calm dollar currencies is actually buy to dip, meaning that you want to sell Canadian dollar. You want to buy dollar CAD on a dip here rather than try to force the trade much more to the downside. It will come in, but I think it's 32 is pretty much the max to the downside that dollar CAD has as far as that goes. So that's how the calm dollars shape up. It really looks to be a strong Aussie, strong Kiwi, relatively weak Caddy, Loonie trade, but all of them taking center stage this week as that's where the event risk lies. Wish you guys the best luck, best trading. Boris, over now.